Hey, you guys, Pam Friedman here, certified divorce financial analyst. I promised I would do this for you all quickly because there is no time to waste. So we're going to jump right in. 6 steps to a financially successful divorce. Lots of myths out there about divorce. I want a divorce. I need to see an attorney right away. No, you don't. If your issues are financial, you need to see a financial analyst. If your issues are parenting, you need to see a parenting specialist and how to co-parent post-divorce. See the right professional for the thing that you need. Attorneys are there. They're the legal. They can give you all the legal advice. Do you want to get divorced under the legal paradigm? The legal paradigm applies to everyone, which means it applies to no one. And will you ever get to a workable settlement if you just use the legal paradigm? And I'm arguing no, that may not be the right paradigm for you. Maybe you want to start with a financial analyst to see what will work for you. What's a workable settlement and what you need to ask for, because if you don't ask, you don't get. And the second one, everyone has a contentious and costly divorce. No, they don't. I work on lots of divorces that are not costly, that are not contentious even, because everyone knows what there is and what there is to divide and how to do it so that we make the pie bigger. Maybe not, but maybe make the pie bigger for everybody, not just the client I'm working for. So what is your interest? Is your interest in a workable settlement that makes it better for everyone? Or is your interest in starting a big fight, spending all your money on divorce professionals? What's your interest? I hear a lot when clients come to me and it's all the drama, right? I'm overwhelmed. I've got the kids to deal with. I've got all things going on. I've got my job, whatever else is happening. I'm like, guys, seriously, you have got to focus. You've got to focus on this. You need to study for your divorce. You would not tell your kids because they're busy with other things not to study for their SATs. They've got to study for their SATs. This can affect the rest of your life. This can affect your financial security. The mistakes you make financially in your divorce compound over time and lead to bigger holes in your financial security in the future. You've got to put a focus on this. So, step one, prepare, prepare, prepare. If you have not divorced yet, if you have not filed for divorce yet, you definitely have to have a couple of things in place. Number one is health insurance. Know where it comes from today. And if you got divorced, there is COBRA out there. If you're on your spouse's insurance at his or her work, that extends right now for 36 months. Any of the rules I say in this presentation can change. You've got to check with the human resource executive at your spouse's company. They may not want to talk to you. They may have to have your spouse sign something that says, you're allowed to talk to my wife, husband about health insurance. But then COBRA kicks in as soon as you're divorced. You have 60 days to put that in place. It's really fast right now. You've got to get these things in place. If you don't have health insurance through your spouse, where's your health insurance going to come from? The Affordable Health Care Act is one of the things that opens up the window, or divorce is one of the things that opens the window for the Affordable Health Care Act. I said that backwards. I'm trying to get this in quickly because I know you guys are busy and you've got to get things done. Have a bank account with 6 months worth of expenses in it. Not possible for everyone, but ideal for all of us, because if you are cut off of the credit cards, if you're only the authorized user on your credit cards, you could be cut off and have no access to credit. So before you file, make sure you have a credit card in your own name. Don't tell me, I don't have good credit, or I've never filed for a credit card before. Try to file for a credit card. Try to get a credit card. If you do, even a secured card, get some sort of access to credit because you'll need it to pay professionals. And then learn about divorce in your state. There's great resources out there. I like divorcesource.com. Read about divorce and how it works, how alimony, child support, how assets are divided. There's 2 kinds of states. There's community property states, there are equitable property states. Read about what that means. Know about how divorce works in your state, how long you have between filing and actually get divorced, what the concept of separation means. And if you do read about it, you're still confused, spend an hour with an attorney to talk about divorce. Pay them for that hour. That doesn't mean you have to sign up for the retainer and do everything right then. Sign up for that hour, get your questions answered, and move on. But if your issues are financial, talk to a certified divorce financial analyst at CDFA. You can learn more about CDFAs at institutedfa.com, institutedfa.com. So let's go to step 2. Step 2 in a financially successful divorce, start with the right professional. I talked about this earlier. Is it really an attorney, or is that what you saw on TV? I want a divorce, I'm going to go see an attorney. So you saw on TV or in a movie. That's the drama, not the reality. The reality is if your issue is financial, see a certified divorce financial analyst or a certified financial planner or even a CPA. Talk about your financial picture. Put things on paper. Know what you're going to talk about with that attorney. Is your issue parenting? Even if both of you can't go, one of you can still make an impact. Go see a parenting coordinator, talk about what they do, talk about how they work, how you might be able to, they might be able to help you. Who else? You might need an appraiser for the real estate. You might need a business evaluation and a business valuation. There's lots of other things that you might need in your case. So start with the right professional. Step 3, negotiate like your financial security depends on it, because it does. What you own and what you owe will be divided. What you own, your assets, what you owe, your liabilities, will be divided. So its value matters. It's going to be put on a piece of paper, and not every single thing is going to be split down the middle. You're going to get this one, he's going to get that one, she's going to get this one, you're going to get that one. What you want, this is the number one negotiation technique that can be used on you or that you can use. What you want in divorce, you want it at a low value. So if you want the house, I'm not necessarily recommending you have the house unless you can afford it, but if you want the house, you want the valuation on the spreadsheet to be low. Why? Because when you add up all the numbers, you'll get more the other side of the sheet. It's just math. Deferred expenses need to be analyzed. Let's say you want the house, and oh, by the way, you guys never replaced that air conditioner you were supposed to last year. You're just kind of letting it go on its last legs. Well, should be reducing the value of the house by deferred maintenance that happened during the divorce, but hasn't during the marriage, but hasn't yet been paid for. Taxes. I'm going to talk about taxes in another step, but when you divide in divorce, the attorney might tell you, well, everything is transferred between spouses with no taxes. That's true. But what if you need to convert it to cash? That's when the tax happens. Should we be reducing the value of any of the assets that we're deciding to split because you're going to need to convert it to cash? What is separate property and why is it important? I think I have a whole other slide that says that. So step 3, negotiate your step 3, negotiate your financial security is at stake. What is separate property? The person claiming it probably has to prove it. Are they going to be able to prove it in a court? Or can you guys just decide, you know what, this is separate property. You brought that into the marriage. You put that down payment on the house. Let's make sure that you get that back, because, that was really not what we all earned in the marriage. Or you're going to start going with the law. The law is very gray in this area. What if you took your separate property and put it in a joint account? Well, a lawyer might say, well, you meant that to be a gift to your spouse during the marriage, so therefore it's marital. But you say, no, it's not. I just, put it in there because I sort of had to, because that was what the mortgage company wanted. And, we were just working out for one account at the time. You did it for convenience, right? So the government is totally happy if you and your spouse can decide what separate property is. If you don't, forensic accountants are going to be hired. Thousands of dollars are going to be spent, all reducing your financial security, all reducing what can grow and support you in your life, in retirement, all those things. Can you guys just decide that some portion of something was your separate property or something you owned before marriage or you inherited? You hide behind the law when the law is on your side, and you ask for forgiveness otherwise, but it'll cost you a lot of money to hide behind the law because the law is written by attorneys and it's somewhat vague, and attorneys like to argue with each other and they get paid doing it. So put all that in your thought process and think about, and can you convince your spouse to think about, because it takes two to negotiate, what actually separate property is. Step 4, I meant to talk about taxes. Like I said before, the IRS, has this rule 1041, transfers incident to divorce there's no tax impact. But when you go to sell the stock you were awarded, oh, by the way, it had what's called a low cost basis, a low purchase price, and the gain is now going to be taxed on your tax return. Also, if you get if you get divorced in the middle of the year, what does it say in your decree about taxes? Are you single for the whole year? Are you head of household for the whole year? What are you for the whole year? Because whatever you are at the end of the year at 12/31, December 31st, whatever you are, that's what you are. So if you're already divorced, you're either single or head of household if you have children. So you need to understand how you're going to file your taxes in the year that you actually divorce and what that decree says about it. Assets, this last point I already made, understand how each asset will be taxed when it's sold, not just when it's divided, and whether or not that needs to be considered because you need to convert that asset into cash you need to actually live on. So taxes need to be considered, even though they're not, transfers between spouses are not taxable in divorce. So number 5, hidden assets. Everyone likes to hear about hidden assets. I think he's hiding assets. I think she's hiding assets. I don't care. Can you find them on the tax return? Not everything is on the tax return, guys. You can find a lot of stuff on the tax return, but only if it produces income in that year. So you're going to find, things like accounts that generated gains or losses, interest, dividends. You're going to find all these things. Where can you find the other stuff like IRAs that may not have generated income that in a particular year, especially for under age 59 and a half? You can find them on a credit report maybe because it's in an account somewhere. So you could probably find it on, have you requested a credit report that would not just the number, but the pages and pages of credit reports to show where all your accounts are. You'll see lots of bank and investment account types on the tax return, on the credit reports. You need to follow up and see if those accounts have money in them. On the tax return, you can find some hidden assets if money was, let's say, refunded, but it wasn't refunded to your account. It was refunded to pay taxes in the following year. So it's pushed forward. That's real cash. If they're net capital losses on the tax return, those can be valued because they offset gains in the future. So it can get complicated quite fast. It's also a reason why you might want to have a financial analyst on your side to look at that tax return. Again, I promised I'd be quick. Step 6, we're there. Managing divorce professionals. Make sure when you're interviewing the attorney or interviewing people like me, a certified divorce analyst, how often do I communicate? What activities do I do that generate actual time charged? What other professionals are charging? When the paralegal is working for me, when other people are working, is that at a different rate? Are you charging an administrative fee per month? So even if I don't talk to you all month because the divorce is taking longer, you're still charging me a rate. Are you charging me for every email? Review your invoices. If there's something you don't like, tell the divorce professional, hey, that's not cool that you're charging me for something. Stay on top of it. These kinds of things can really add up. So let me just quickly do a little bit more of an introduction of me. Again, I'm Pam Friedman. I'm a divorce financial analyst, certified divorce financial analyst. I've been doing this for over 10 years. I am super committed to getting a message out there that you may need a financial analyst more importantly than a legal analyst on your divorce. These are some of the reviews of my first book, I Now Pronounce You Financially Fit, How to Protect Your Money in Marriage and Divorce. I recently put out a new book, very recently, Financially Fit Divorce. It's on Amazon and you can get a hold of it. So consider getting that book. People who've worked with me do feel more financially educated. Look, if you're like, oh, I'm overwhelmed by the divorce. This is way too hard. It's too much. You don't have time to be dramatic. You don't have time to be frustrated and overwhelmed. This is the rest of your life. This is important stuff. You have got to say instead, reframe for yourself that this is something that's challenging. It's a challenge that's come up in my life. I got to face that challenge. I need some help to face that challenge. The book might be your help. So give all that some thought. Here's your 6 steps to a financially successful divorce. Hopefully you got some value out of this. Again, Pam Friedman, and go get them out there.